Hello, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, welcome back to another week. Bitcoin is kind of at the bottom of its range now, down in the 71K territory. That is being blamed on ETF outflows. On a more macro level, we might be seeing an end to the Iran war, hopefully. More in regulatory news, the tokenized stocks and pre-IPO stocks, which have been all the rage, as I'm sure some of you have seen. The SEC has actually announced last week that they're going to be delaying a decision around those assets for now. A little too complex for them to dive in. Relatedly, Spain and Indonesia, they've been the latest two ban prediction markets, Kalshi and Polymarket. We will see as these platforms continue to grow, who will actually build regulations around them and who will just do an outright ban. Social Finance, or SoFi, today announced the launch of their SoFi USD stablecoin. They had announced this, but today they are rolling it out to users, which is huge. And the other piece of news is blockchain.com confidentially filed for an IPO, which is supposedly coming in the next couple of months. All of this is big. IPOs are hot again. But as always, we are here to talk the tokens. So I will get started. So for this week, I'm going to start by talking about Maple Finance. So last week, Maple Finance, which is one of the leading on-chain asset managers, is what they call themselves. They launched their borrowing hub. So for those who aren't familiar with Maple Finance, like I said, they call themselves an on-chain asset manager. They started the bread and butter of their business is offering uncollateralized or over-collateralized loans to institutions. But more recently, they have also been they've also created their own yield-bearing stablecoins, Syrup USDT and Syrup USDC, which has offered yield to users depositing the USDT and USDC stablecoins. They've managed to grow quite a bit in the last couple of years and become pretty dominant and transition to what they're calling themselves this new category of on-chain asset manager. So this borrowing hub product, that they launched this week, that actually it's a unified view basically for borrowers showing their loan activity on Maple's platform. So part of the Maple 2026 roadmap was to kind of scale to $100 million in ARR. And in order to really do that, they emphasize that they need to make sure that they can scale their product without adding additional human headcount. So this is, potentially a great move on that path to that angle. Also last week, though, Maple announced that it had reached a settlement in a dispute with Core DAO, which is a Bitcoin staking product. So this dispute actually came up last year, I believe in September, and it tied up assets that were in Maple's Bitcoin denominated yield product, which was about $100 or $200 million worth. So the dispute was kind of held up in court, but now that it is being and it also when it came up, the dispute tied up assets in this product, but it also paused the development of the Syrup BTC product, which was another one of the 2026 roadmap goals for Maple. So the finalized terms of the settlement, they weren't disclosed publicly, but Maple stated that they're going to be allowed to continue with the launch of Syrup BTC, which will be a good catalyst for the project. To give you some numbers behind Maple and their performance, they currently have about 3.7 billion in AUM, and their annualized revenue is 13.4 million based on the last 30 days of data. Maple, though, it's not been a market darling as of late. It is down 14% for the week. Okay, next up, we're going to talk about OKB or OKX. So last week, the crypto exchange OKX, they announced that they're going to be partnering with the Intercontinental Exchange, or ICE, to list oil perpetual futures contracts. So OKX said that they're planning to list two of these oil perpetual futures contract, one tracking the price of Brent crude and the other tracking WTI crude. So the partnership really comes as centralized entities have become more and more wary of Hyperliquid's dominance. So I've talked about Hyperliquid a bunch on here. They are the largest decentralized perpetual futures exchange, and they are quickly becoming one of the largest exchanges for crypto in general. But because they are decentralized and offshore, it is technically not they don't technically fall under US regulations at the present moment. So according to actually reports from last week, ICE and the CME, Chicago Mercantile Exchange, are pressuring US regulators to rein in these on-chain offerings, specifically focusing on hyperliquid. On-chain markets have really surged in the last several weekends with the Iran war, because as there's more volatility in these oil markets, they can only be traded on venues like hyperliquid over the weekend. So probably the reason that this OKX partnership is being struck, to kind of offer that weekend access to oil when the markets are closed, when traditional markets are closed. But again, more of a move to the 24/7 markets that we know are in our future. The OKB token actually shot up about 13% on this announcement last week. It's since retraced some of those gains, and it's ending the week just up 10%. Okay, last I'm going to talk about Near. This one has been on a crazy tear. So Near, it's a privacy and AI focused layer one. They have been on an absolute tear the last month, as just a confluence of factors have really pushed the token higher. So past week, though, specifically, Near gained a lot of momentum after Arthur Hayes, the founder of futures exchange BitMEX, predicted on a podcast that the token could significantly increase over this year. He did cite a specific number. It was pretty large. But specifically, Arthur Hayes makes tons of predictions all the time about the price, increases on certain tokens. A lot of people believe that, he owns it. He's shilling his bags, so to speak. But a lot of people put stock into what he says. On the more tech front, though, Near did recently launch a confidential payments system via Intense, which allows for cross-chain swaps between Near and Ethereum. Now, this privacy features like this, though, they've been really long sought after in the digital asset ecosystem. As I've kind of discussed, a lot of institutions have stated we really need privacy as a way to adopt cryptocurrency. So the confidential payment piece has been a newer in the last couple months, and a lot of people are kind of pointing to that as a reason for Near's outperformance. Finally, Near also stated that they're planning to roll out another update next month, which should generally improve network speed and throughput. To give you an idea of how Near has been doing, it is actually up 65% just this week, but it's up about, I believe, 300% in the last month. All right, that's all I have for you guys this week. Hope you enjoyed our insights. Tune in here next Wednesday again at 1 p.m. Pacific to hear what's driving token prices.